For the last couple of years, India's startup scene has felt like it's been in a deep freeze. But in 2024, something really shifted. Today, we're going to unpack the story of a multi-billion-dollar comeback that kind of rewrote the rules for venture capital in the region. So, let's dive right in. Right. So you've probably heard this term funding winter thrown around a lot. It's meant cautious investors, shrinking valuations, just a general slowdown for startups. But the real question on everyone's mind has been, is that deep freeze finally over? Are we actually seeing the first signs of a thaw? Well, the answer can pretty much be summed up by one absolutely massive number. In 2024, venture capital and growth funding in India just rocketed to $13.7 billion dollars. And that's a figure that doesn't just suggest a recovery. Nope, it signals a powerful, full-blown resurgence. So, how on earth did we get here? What exactly was the fuel for this incredible turnaround? In this first section, let's try and decode the key drivers behind this multi-billion-dollar rebound. Just take a look at the jump on this chart. We're not talking about a small uptick here. Funding grew 1.4 times, going from $9.6 billion in 2023 all the way to $13.7 billion in 2024. And what makes this even more amazing is that this happened while the rest of the Asia-Pacific region's funding was basically flat. India was a total outlier. And this wasn't just about a few mega deals skewing the numbers. The entire ecosystem just revved up. The total number of deals shot up by a whopping 45%. Plus, we saw the number of those big $50 million plus deals nearly double, which really signals a renewed confidence from investors in the top-tier companies. Okay, so a huge piece of this story is a much friendlier policy environment. The government brought in some real game-changing reforms. Abolishing the so-called angel tax, that made it way easier for early-stage startups to get those crucial first checks. Reducing the capital gains tax made the potential returns for investors look a lot more attractive. And making it easier for companies to move their headquarters back to India, that opened up a whole new path for them to go public on local stock exchanges. All right, so with all this capital pouring in, where did it actually end up? Let's follow the money and see which sectors grabbed the lion's share of this investment boom. This chart tells a very, very clear story. Consumer technology was the absolute star of the show, pulling in a massive 40% of all funding. And when you add in software as a service and fintech, you can see that tech-focused sectors attracted well over 60% of the entire investment pie. And here's a look at the actual companies that were topping those funding charts. I bet you recognize a bunch of these names. Zepto, the quick commerce platform, raised a staggering $1.4 billion. And they're joined by huge players like Meesho, Rebel Foods, and Rapido. What's the common thread here? They're all tapping directly into that massive Indian consumer market. Now, Zepto's massive funding round really shines a spotlight on one specific trend that just exploded in 2024. It's a sector that might have delivered your groceries or snacks or maybe even electronics in under 15 minutes today: quick commerce. To really get a sense of the scale of this shift, just consider this. In 2024, India's quick commerce sector was processing over 70 million orders every single month. That is just a mind-boggling level of consumer adoption, all fueled by convenience and a super fast expansion of services. I mean, let that sink in for a moment. What was once a tiny niche service is now the dominant force. Quick commerce platforms have gone from being a small slice of the online grocery market to making up nearly 75% of all orders. It's a complete reshaping of how people shop. And you better believe investors are taking notice. DSG Consumer Partners points to this perfect storm of factors. You've got a young population, rising incomes, and this growing appetite for new, innovative brands. It's this combination that's making India's consumer sector one of the most exciting investment opportunities on the planet right now. So, a surge in funding is one thing, but for an ecosystem to be truly sustainable, investors need to see a clear path to getting their money back out. In 2024, that path, what we call the exit, it changed dramatically. For years, the main way investors cashed out was through acquisitions. But look at the shift. In 2023, public market exits, or IPOs, made up 55% of the total exit value. Just 1 year later, that number jumped to 76%. More startups than ever are going public, and that is a huge sign of confidence and maturity in the market. And just to be super clear, this wasn't some small adjustment. The total value generated from IPOs absolutely exploded, surging by 7 times in just 1 year.
This is a clear signal that the Indian public markets are now a really viable and lucrative exit path for homegrown tech companies.
And this doesn't seem to be just a one-off trend. Investors like Lightspeed India Partners are confirming a really bullish outlook for the IPO market, with a strong pipeline of companies getting ready to go public. This creates this powerful, virtuous cycle, right? Successful IPOs show other founders and investors that these massive outcomes are possible, which in turn attracts even more talent and capital into the ecosystem. So, after this landmark year of recovery, growth, and maturation, what does this all mean for 2025 and beyond? Where does the Indian startup ecosystem even go from here? Well, the outlook is overwhelmingly positive. Investors are still confident and they have plenty of capital ready to deploy. We expect to see investments in more mature, growth stage companies rise. And while consumer tech is still going to be strong, we're seeing capital flow into new, really exciting sectors like deep tech, the energy transition, and even semiconductors. So, what's the big takeaway here? The funding winter, it seems, is really over. India's startups have weathered the storm, and they've come out stronger, more focused, and backed by a truly resilient ecosystem. The question now is whether these whispers of spring will bloom into a new golden summer for Indian innovation. It's a story we'll definitely be watching closely.